Welcome to this video. Will Sebastian here from the Trading Mentor. Of course, if you want to learn to trade for free, go underneath this video. Our live email list is there. We've just done a 2-hour session in the live room with our lovely members on Zoom, teaching them how to trade all financial markets. You can see currently I've got the AUD Swiss up. AUD Swiss moving a bit today, so I thought I would just do a video on it so everyone can really see where we're at. Of course, what you have seen with the AUD Swiss is this newfound upwards trajectory, creeping along, minimal drops really, not a lot of a dip. And where you find yourself now is with a very strong green side candle moving into what was key rejection, key price action. So orders clearly going out of the market there, and traders saying, all right, you know what, we want to sell our order against the Swiss franc. Now, the Swiss franc, of course, or the Swiss bank rather, dropped rates recently, and you've had a big drop in inflation as well. So it does sort of spell a little bit of a divesting away from the Swiss franc. And of course, AUD lately, similarly to the US, has seen slightly more hawkish tone. So you can see that any fall really within those parameters likely to get rejected, and that's exactly what's happened. You can see your weeks off your nearest MAs. I mean, your 20 MA coming back to Wednesday, the 20th of March, to now 2 weeks or so, or 3 almost, and you're well off this 40 MA, okay, which you've not hit for a while. You crossed over with your 200, although less relevant back then. But really the rebound has come off these lows. You can clearly see that's where traders do not like the AUD to get any weaker against the Swiss franc, and that's where the buying has come in. And I think conversely as well, the Swiss bank don't really want the Swiss franc any stronger, because like I've said in many of my videos, there's an equilibrium to be had when a currency is too strong, too weak, and the balance gets played out in the markets. So weeks and weeks up now, really your job is to look for short zones. I think given the current market sentiment and the clear price action, you're probably going to go beyond that previous candle wick, which I've just labelled. Just this one here. So I think it's reasonably likely that you will continue a little bit higher for your next level of reasonable resistance. I would say if you want to get short in this market, I would do it really in line with your longer term MA there. Your 100 at least is a good reference point for shorts. You can see your stock oscillator remaining in oversold. So anything up there, really, I would prefer short, looking for exits on a fall. It doesn't exactly excite me right now. I think given the fact you've come down for such a long period of time on that renewed Swiss franc strength, it's not really ideal just yet. You know, technically, yes, it is a short. I wouldn't buy it. It doesn't turn me on as a long at all. And you are seeing signs of rejection on those lower time frames already. I think you've got a bit of time to run. I think you're not seeing much in the way from this this current high, okay, or this previous high. Similarly, your other high time frames, every fall just rebounded, okay, rebounded and rebounded, rebounded on a continuous basis within that renewed strength. Clearly, you can see the Swiss bank is going to. They're giving a bit of a hint of direction, but the most sort of sought after or thought of trajectory is a lessening in rates. Of course, when that happens, the money goes away from the Swiss franc, and rates are still reasonably high in Australia anyway, which is keeping it prompt. I would say long-term divestor or investor shorts, if you like, you're probably looking much higher up than the aforementioned labelled area. If you've got a short zone here, like we were saying, I'd probably not go for another short until you get up here. I'd really strip things out so you can get the whole spectrum of the market. You can see quite clearly your 200 MA coming down at this point and your 100 there. So it's clearly reflecting the long-term market value. You're not at the long-term short market value just yet, and I think you've got room to go. Although it's absolutely not a long, you had your chance to buy it down there, is all I will say, with key price action, bottomed out, oversold stochastic oscillator as well. So if you do get short at those points, you're doing it in line with the long-term downtrend, which is very much a good idea because you can swim with the tide as the market falls. Okay, and that's what you could have done the whole way down and made, a considerable amount of money should your risk management plans have been right, which you can learn with us. Don't forget, you can get it underneath. See you in the next one.